What's going on, everyone? It's Finnies here. And if there's one thing Warren Buffett knows, it's that market crashes aren't something to fear. They're opportunities in disguise. And right now, with all the turbulence we've been seeing in the market, well, it seems like a lot of people need that reminder. At the recent Berkshire Hathaway meeting, Buffett was the picture of calmness. While others were freaking out, he was calmly explaining why he's still bullish on America and the stock market in the long run. Because here's the thing, in times like these, it's more important than ever to keep a cool head. Don't get caught up in the panic selling. Instead, think of it as a chance to buy quality companies at a discount. Speaking of which, let's take a look at 3 stocks in particular that Warren Buffett loves and why you should consider adding them to your portfolio. Let's get into it. First up, we have Apple. Now I know what you're thinking. Apple, isn't that a little obvious? But hear me out. Apple is a cash-generating machine, plain and simple. Last quarter alone, they raked in over $95.4 billion in revenue and $24.78 billion in net income. Plus, they sit on a mountain of cash, literally over $50 billion in cash on hand. And while their stock might be down a bit recently, that's just noise in the grand scheme of things. Apple has an incredibly loyal customer base, a rock-solid brand, and they're constantly innovating. Let's not forget, they're making major moves in AI, and we all know that AI is the future. They recently announced a partnership with a leading AI research lab, and they've been quietly acquiring AI startups left and right. The point is, Apple is playing the long game, and they're well-positioned to dominate the tech landscape for years to come. So, yeah, I think it's safe to say that Apple is still a pretty solid buy. Next, we have NVIDIA, the company that's practically synonymous with AI. I mean, they're the leading provider of graphics processing units, which are essential for everything from gaming to data centers to, you guessed it, AI. And their financials? Absolutely stellar. Last quarter, they reported $39.3 billion in revenue, exceeding expectations and demonstrating the insatiable demand for their products. And get this, their non-GAAP gross margins were a whopping 75%. That's insane. Now, I know their stock has been on a tear recently, and some people might be hesitant to buy in at these levels. But here's the thing, NVIDIA is at the forefront of a technological revolution. They're not just riding the AI wave, they're driving it. And as AI continues to become more and more integrated into our lives, NVIDIA is only going to become more valuable. Chapter 3, Amazon. Finally, we have Amazon. Now, I know Amazon has been getting a lot of heat lately for its labor practices and its impact on small businesses, and those are definitely legitimate concerns. But from a purely financial standpoint, Amazon is still a beast. They just had a blowout quarter with revenue hitting $155.7 billion. And their cloud computing division, Amazon Web Services, continues to be a cash cow, growing at an impressive rate. I know some investors are worried about increased competition in the e-commerce space, but Amazon has built such a massive infrastructure and logistics network that it's going to be incredibly difficult for anyone to catch up. Plus, let's not forget about their Prime membership program, which has over 200 million subscribers worldwide. That's a lot of recurring revenue. So, yeah, Amazon might not be the shiny new toy anymore, but it's still a solid long-term investment. So, there you have it, 3 stocks that Warren Buffett loves, and why you should consider adding them to your portfolio. Remember, the key to successful investing is to think long-term and not get spooked by short-term market fluctuations. As Buffett himself has said, be fearful when others are greedy, and greedy when others are fearful. If you found this video helpful, please give it a thumbs up and subscribe to the channel for more investing tips and insights. And if you're looking for ways to diversify your portfolio and protect yourself against inflation, be sure to check out the free gold IRA guide linked in the description below. Investing involves risk, and past performance is not indicative of future results. This is not financial advice. Do your own research and consult with a financial advisor before making any investment decisions.